What's up, Chris? We are live on a Friday. What's going on?
Not too much, Jay. Happy Friday. Happy Friday, happy Friday. Welcome, everybody out there to On the Rocks, the show where we talk about accounting and accounting adjacent information, mostly as it relates to e commerce, but not only. I'm Chris Gino, and I'm here with Jay. I did it right this time. Nailed it.
That's right, you did. Yes,
Jay
you remembered.
Kimmelman. That's right, Jay Kimmelman. Last week we started our series on building an e-commerce business. We talked about what e-commerce is, what types of e-commerce businesses exist, and the pros and cons around starting and operating an e-commerce business. This week we're going back to the basics. We're going to do financial literacy 101. What are the things that you need to know about the finances of your business when you get started? What are the things you need to do around the finances of your business as you get started? We're going to talk about all that today. But first, what happened this week? And Jay, normally I ask you what happened this week, but this time I'm going to start with what happened this week.
There you go. It's all you.
This weekend I went to a bowling tournament here in the DFW area, and right now I'm 16th place out of about 200 entries. So I'm pretty proud of that. But either there at the bowling alley or sometime later, I picked up some kind of sickness from somebody, and it might have been my daughter. That wouldn't be a surprise. You can hear it in my nose. You can hear it in my nose, and you can see it in my face. I also got pink eye, so this will be but I'm powering through because I really enjoy talking to you, and I really do love ending my week with our conversation. And it also, it's a little stuffiness and a little bit of tenderness in my eye, so it's not that big a deal. But for those of you that are watching on YouTube or some other platform, just know that if I dab my eye with a tissue, that's what's going on. Some gross stuff. Don't look too close. So that's happening with me. That happened this week for me. Hopefully next week I'll be better and I can talk about the recovery process. But we'll see. What else happened this week? We have loads and loads and loads. This is the most I've seen in as far as like things that I felt like we should talk about in any week in a while. So we touched on it a little bit last week, Jay. The IRS and their strategic plan. They released that last week. We touched on one of their points, and I know you wanted to talk a little bit more about that this week. So what other good takeaways are there from the IRS's strategic plan?
Oh, for sure. And last week we talked about the increased enforcement for
Right.
higher income individuals. This week
Mm-hmm.
we're going to talk more about some of the other objectives. And I really
Okay.
think these other objectives are really intermingled because what they are trying to do with objectives 1, 2, and 4, and it's not important that you have that, but that's how they've labeled them.
Right.
So they want to dramatically improve the service to the taxpayer to help them
That's great.
ensure they're meeting their obligations and paying their taxes. So by doing this, they want to enhance live assistance. They want to actually open more offices. They want to expand on online services, and they want to expand their employees' tools. All that's really important. And
I mean that.
that ties into objective 2, which is helping taxpayers quickly resolve their issues. So
Mm,
we get what we need quicker, we resolve issues quicker. And what they're looking to achieve with resolving issues quicker is simplifying notices, I guess using plain English instead
oh
of the
yeah. Okay.
taxis that they're spitting out to us.
Sure.
And the other side of that is there are a lot of tax scams out there, and they're trying to make sure that nobody gets
So
bit
many.
by these schemes out there. Because, it used to be, and even the IRS came out and said this, we will never call you. And there were a ton of scams with people getting called and being told they had to pay their tax bill immediately and being told to get green dot cards or other types of gift cards.
Oh
And
no.
people fell for that, and unfortunately, it does happen.
Right.
Objective 4 is continuing adding additional technology into what the IRS has, and we've talked about some of this technology over time.
Yeah.
So this includes the individual tax portal, giving your tax pro like us access to that portal. It's having an online portal for uploading documents. It's actually having a business tax account portal. Things like that they're trying to do, and make it easier for everybody. And these things are so intertwined that some of it is being stifled right now because of politics. We've heard about the investment that they're making in the IRS and the partisan games that are being played with, oh, we're arming IRS agents to come after you and take your money. But that's not the case. Some of this is actually infrastructure so that they're not arming, that's a whole, BS. I'm calling bullshit on that one. But, a lot of this is infrastructure and putting the tools in place to allow the revenue agents to service us and our clients, the taxpayer. Yeah. So we look forward to this, and we're looking forward to what comes, because what we've seen over the last 12 months is greatly increased the efficiency for us, at least, and although in the last 2 weeks the hold times on the practitioner priority line has increased. So
yeah, I've seen that across the board. So I know that there must be something unusual going on there. I do think it's really interesting that these critical points are so consistent with some of the same stuff that those CEO studies that we talked about that KPMG and Grant Thornton did. They're like very, very similar stuff. They want to improve the employee experience. They want to improve the customer experience. Yeah. And they want to embrace technology, which is kind of almost exactly the same things that some of these other CEOs have said. So it's very funny to me that that basically the IRS is operating like a lot of other big business right now. I think that's great. Is there one strategic plan point that we haven't talked about, or is that everything we've been talking about?
The last one, I actually went away from that page to pull up something else. The other one is, what most accounting firms are trying to do: attract, retain, and empower their teams. So, like most tax firms today, they're having issues keeping their team and maintaining them as well. So that is the last item on their strategic plan, and we can all feel for that.
Definitely. And so it is. That's another interesting thing to think about too. Is just like any accounting firm, the IRS has a difficult time retaining people and keeping them on. That doesn't surprise me at all, especially the way that the IRS is talked about in the internet is generally, right? And then also some of the things that I hear about people, like I can imagine just a regular taxpayer trying to get on the phone with the IRS, like that conversation is probably not that enjoyable for the IRS agent. That's my expectation.
And I would think it's equally not enjoyable by the taxpayer, because they have an expectation going in they're going to get their needs met immediately. Right.
Yeah, that's true. And the IRS isn't right. The IRS isn't Amazon, because there's just more stuff that goes into into compliance that way than to just click a button and get it here timely. So yeah, I definitely agree with that. I saw a whole lot of other things. Or before we move on, is there anything else about the strategic plan that you think we should talk about, Jay?
No, we're good there.
All right. Yeah. So I know I saw like all kinds of interesting things in the news at the end of last week. Some of it's a little older, and it just came back through my feed and my timeline. And so I saw again, and I was curious about your thoughts, and that's why I wanted to talk about it today.
Yeah, for sure.
The FTC. It wasn't this past week, but it was maybe 2 weeks ago, or even 3 weeks ago now. But they made a ruling around non-compete agreements and shut them down. And so I was curious, because I'd love to get feedback from you, or have a conversation around, like, how does that impact people? How does that impact businesses?
So basically, there's one portion of it that got thrown out, and to save my life at the moment, I can't think what portion it is. But,
that's okay.
I know here in Florida, being a free state, you cannot restrict somebody from taking another job because of a non-compete. So I'm assuming it's something along those lines. I could be very wrong though. There are a lot of
Yeah.
different components of it. So
Yeah, no, and so I think, like, I know non-compete agreements are the most frequent time that you see them is when you sell a business, right?
correct.
Uh, when you sell a business, you as the purchasing person, you don't want the individual who built up this business to go back into business, right, and
Yep.
do the same thing that they were doing and just steal all of their customers back.
Right. But you
That
also deal with
that
that with new employees at higher end
yeah,
employees because you don't want them
right.
to do the same thing to you.
That's right, and
So
so people and so companies will often use these non-compete clauses of, or the non-compete agreements generally, like to make sure that they're not getting exposed to this. And so it would be really interesting to see what happens or how that impacts the acquisition market. If if now somebody can build up a business, sell it, and then basically just build up the exact same business with the exact same customers by poaching them back from themselves.
yep.
I think there will be some very interesting shakeouts of that, and obviously it may if the restrictions are much more narrow than like very broad like those types of things, then maybe
Right.
it doesn't matter as much.
And it'll
But
be
if not,
interesting to see when the first lawsuit gets filed regarding this. So
right? Yeah, absolutely. It'll be a thing that I'm sure we'll get some more information around, and it may have a significant impact on the business acquisition market for sure
oh,
if
for
there
sure.
that changes the way that companies can operate.
Yep.
One other thing that I saw in the news at the end of last week was it sounds like S corp reasonable comp audits might be coming. For entities that are structured as S corps, the owners, if they are a part, if they do activity for that business, they have to take a reasonable compensation, and if and the purpose of that is all tax related, right? Like it's so that
Yeah.
you're paying the right amount of employer taxes for payroll, and then also not being able to just like not pay any tax, not self-employment tax at all, because
Right.
you're recognizing the income in a different way on your own tax return, where you would just be avoiding a bunch of tax by structuring
Yeah.
yourself as an S corp if you didn't give yourself reasonable comp. Um, and so hearing that more audits are going to be coming around this perked my ears. Anytime I see hey, more audits might happen, that I'm like, oh, that's interesting. I wonder why. And so Jay, I'm going to ask you that question. More audits might be happening. I wonder why. Why is that going to be a point of focus potentially?
Well, it's a point of focus because we've been telling our clients for years that you have to have reasonable comp, and they're like, well, and my company made $500,000. I took a salary of $50,000. I mean, that's reasonable, and yet they pull out distributions of $250,000. That is not reasonable. So, you know,
Yeah,
there are a lot of different factors there, and
yeah,
you know, years ago it used to be just pay yourself over at or near the FICA limit. 110, 100, whatever it was when the payroll taxes went away. But as the landscape has changed, it's more than that. It's because now we also have additional Medicare tax on top of it at certain levels.
Oh, yeah, okay.
So you also have that to help alleviate that fall off on the Medicare
Right.
side. So,
Yeah,
when you're looking at reasonable comp, you have to look at what would you pay somebody off the street to do the job you're doing,
right.
and that is the ultimate.
A reasonable comp.
Yeah,
It's the
I mean,
fair value of your
that's
compensation,
the
right?
measuring stick right there.
Yeah.
So, if you run a law firm and you are the lawyer, and
Yep.
you are, taking a salary of $50,000 and you're making $500,000, what would
That's
you
probably
be
not
paying
reasonable.
another litigator to do that? It's a whole lot more than that.
I would imagine so.
And
Yep.
actually, the IRS doesn't need to audit that.
Oh no.
They can just deem your wages unreasonable.
Oh, really? Okay.
Yes. And they won't do it right away. They will send you a letter and give you a chance to fix that.
Mm.
And over time, if you don't, they will just reclassify those distributions as wages and send you a bill for the payroll taxes. So, yes, that is built into the S corp rules. And
Oh, interesting. All right.
people, it is a tax strategy to
Yeah.
pay less tax and be an S corp, but you still have to go through the rules and
Follow
do
the
all of
rules.
that.
Right.
And
Yeah.
it's still
Absolutely.
beneficial, but take salary. And today you have to weigh all that out and the salaries with like things like the QBI deduction and things along those lines.
Sure.
So there are a lot of different factors at play.
Right. Yeah. And so again, I think we've mentioned this back before, and we'll do it again here. Is don't just be an S corp because you heard somebody talking about being an S corp. There's a lot of thought and consideration that needs to go into that.
Yes.
And then basically, like you said there, Jay, like there's even more now than there used to be.
Yeah,
So be really thoughtful about that.
and even there's more to it than just what you just said there. I was
Yeah.
listening to a TikTok today of a creator that left their W-2 job and they created
All
an
right.
LLC and they got their EIN and they were talking about how they went through setting up their LLC and all those different parts. And the last thing they said was, now my thought is, do I set up payroll for myself and give myself a W-2? And I'm like, that's a great question. But if you, and as a sole proprietor, as a single member LLC, they are set up as a sole proprietor and you should not have
Right.
payroll. So
No,
I've
definitely.
been trying to figure out how do I sneak into that TikTok, and because I wanted to do a video comment, and my daughter's like, "Dad, you can't do that." I'm like, "Why not? That's not right. We got to be able to do that." No, you can send a video. The creator can respond to a comment via video, but you can drop
Oh.
into their comments with a video. So I
Oh,
might
you
have
need
to
to
stitch
start.
that one and do that.
You
So
need to start. You need to start JTalk or something,
I'm telling you,
and add this feature, and
Econ
that'll be an
J
interesting
on
feature.
TikTok and
But
Instagram.
yeah, right. No kidding. Yeah,
Okay.
Jaystagram.
Just
Uh,
yes, I love it.
so yeah, obviously there's a lot of things to be thoughtful about that, and if you aren't taking reasonable comp and you start to receive a letter, don't be surprised because it's definitely happening,
It is coming.
and people are going to be looking at it a little bit more frequently for sure. Um, one other thing, and Jay, I don't know exactly where this came from, but I know that there's been a lot of conversation about TCJA because it's
Yep.
about to expire, and there's conversation around renewing it.
Right.
And so I know that I don't know if there was just a report that recently came out of the estimated costs. Is that what
Yeah,
happened? Or
that's exactly what that is. So
okay,
if the TCJA gets completely extended for 4 more years, it's going to
uh-huh.
end up costing the U.S. government $3.5 trillion.
That is a good amount of money.
It is.
Um,
And
yeah,
that
and
made me think, though, what did it
right,
cost for the prior 7 years that it's been enacted? So 2018 through 2023,
yeah,
that came out to be, well, that's, I guess, 6 years.
yeah,
So
something like that.
so far, it's been 2 trillion that it's
2 trillion.
cost. So it
Yeah,
definitely wasn't budget neutral.
no, that doesn't sound budget neutral at all.
Right. I mean, it
That is
did
a
kickstart the economy and
yeah,
increased spending and got businesses moving, which is partially why we're in our inflationary state today. The other part of
yeah,
that is shutting down for COVID and restarting up and all
right,
the demand. But so,
right.
I think it's important to understand, though, these are the items that are set to end at the end of 2025. And it's the reduction of the income tax rates and the adjusted brackets that will expire and the tax rates will go back up. There will be a reduction in the standard deduction and the personal exemptions will come back. The doubling
Oh,
of
okay.
the child tax credit will expire. The good thing is the limits on state and local taxes will expire. So if your real estate taxes are $25,000, you won't be limited to 10,000. The reduction of the AMT will come back.
Okay.
The AMT will increase. The QBI deduction will expire. So those interesting thing though, the one thing that doesn't expire is the C Corp rate of 21.5% stays. So
Oh, is that right? Really?
So that is a major tax planning thing right now. So are we betting that it's going to get extended or go away? I mean, a lot of tax planning went into back in 2017 and 18. Okay, do we go C Corp now? And weighing all that out. So now we have to look at it from the other side. And
Yeah, it was I still remember that, and because I remember when that happened, when TCJA was issued in the first place, when the corporate tax rate changed.
Right.
Because one thing that people didn't really think about right away was that meant that the valuation of all your deferred taxes,
Right.
It all changed, right? So if you had a whole bunch of DTAs, you were about to lose a lot of value, and so it meant that you had a lot of opportunity to do that tax planning in that year to try to capture as much taxable value from
Right.
those longer period deferrals.
Yep.
Which I still remember talking about loads and loads, and then doing the updated calculations on the tax provisions during that year, because you had to change them. All the tax rates were changing, and it made for really, really unusual looking financials in some spots, because it made a significant impact, especially
for
if
sure.
you had those acquisition related goodwill intangible style, like DTAs or
Right.
DTLs. It was a very, very substantial impact. So if it changes, it'll do it again. And so it's really
Right.
interesting. One question that came to mind as you were talking through those things, I know the overall tax rates went down for
Right.
just everybody across the board. As they go back up, is it up for everybody, or is it up for the wealthy most, or
It
up
will
for
go up for everybody.
everybody?
At the
All
low
right.
end, you will see the lower end taxpayer paying about $1,500 more in tax.
Ooh, buddy,
So
that's a good amount.
it will be an impact across the board. And
Yeah, so it sounds like maybe.
yeah,
Maybe
and
is
that's
there?
why
Do you expect?
we expect it to be dealt with. But
Right.
at this point, nothing's going to get done until after the election.
We,
It
yeah,
doesn't
we thought that
expire.
too
Right.
about
Exactly.
the research and development stuff and all the stuff
Right.
that was kind of hanging
Yep.
out there at the end of the year, and then of course nothing happened. So yeah, what other facts are out there that we should talk about related to this?
I think that pretty much exhausts it at this point.
All right.
It's
All right,
it's a
wonderful.
wait and see and see what happens at this point. I really
Yeah.
did not expect it to take this long. I would have thought it would
Yeah.
have gotten to try to be addressed by the Biden administration.
Yeah, you
With
would
all
think
the
you would
talk
have thought
of
so, at
raising
least.
taxes, on the higher
On
end
the wealthy.
taxpayer. But
Yeah, right.
it is what it is at this point.
Yeah, no, I agree with that. It's another one of those things that we'll put on the wait and see list,
Sure.
and know that there's probably something that's going to happen, but it's impossible to say right now what that's going to be,
Right.
and especially if the complexion of Congress changes in any kind of meaningful way,
Hmm.
like it may be a very, very, very different result
Right.
than what we would project today. Uh, Absolutely. One other thing, obviously, I mentioned this last week. Borgers, the audit firm, getting shut down. I did a little bit of extra deep diving over the weekend around this, and I realized the extent of it, and I just wanted to come back because uh, oh my goodness, what a hot mess this situation was. So obviously, what I said before, like last week, I said I've never heard of this happening. Well, that's because I've never heard of a lot of the things that were going on here happening. One of the things that I did over the weekend, I went and looked at the PCAOB reports for this company, and in 2022 and in 2021, every single audit that was selected by the PCAOB resulted in some type of deficiency. And in 2019, the year prior, 2020, the year prior to that, All but one had some kind of deficiency. So this company had deficiencies in every single audit that they participated in, with one small exception that the PCAOB had selected for reporting. So that's a pretty clear indicator that there's kind of like a hot mess going on because they have some pretty substantial problems if that's happening. And then I read an article, like I'd seen this as a headline, but I hadn't read much about it. And so I went and looked at the SEC report and read some articles around it because this is a thing that I found fascinating. And one of the things that I learned was that this company, the main partner, the main operating partner, had basically told his staff people, like, just roll forward last year's work papers and let's sign off on them again without doing any extra work, without doing any extra activity. And that's what they found. That's what the SEC found, is that this guy wasn't really reviewing any of this stuff that was happening. His staff people were being directed to just copy and go back right into the same work papers that were there last year, which means that, like, you're definitely getting really, really bad audits. Now, it's possible that the audit work might have been, like, extremely similar from year to year, because if you're like an SPAC that maybe hasn't purchased an entity yet and you're sitting on a couple $100,000 in cash or something like that, and it's just sitting in a bank, then maybe your bank testing work paper is really, really comparable. But the instruction was copy it, change the dates, move on. And that's a really, really profitable business model, but it's absolutely a non-compliant business model. So once I learned a little bit more about this, I was not surprised at all that the SEC closed this company down, but I was surprised that it took so long, because this is absolutely out of control, especially as the PCAOB in their own evaluations had continued to find significant deficiencies in the practices that were happening. Now, a lot of the companies that this company was auditing, like, they were pretty small. I think the PCAOB report had maybe 70% of them were less than 10 million. Like, those are very small public companies, but at the same time, like, it's just wild to even think about instructing someone to just copy last year's work papers and let's move on. That's pretty crazy. And one of the other things, like, one of the most important things that you can do in an audit is the planning. Right. And that work paper also was just copied. The engagement planning work paper, the conversation with the engagement team, they just copied it every single year after the first one, and never actually had that conversation about it. Like, hey, what are we going to do around this audit? Like, what kinds of things do we need to worry about? And some of that stuff is the most critical stuff that you can do in an audit. So I am, as a former auditor, I am very glad that this has happened, because that is some really gnarly practice, and I'm glad it's not happening and not out there anymore. So I hope that this is the only firm that was ever doing that, but I know with 100% certainty that's, like, probably really unlikely. But good on the SEC for following through on this one. And man, what a story! That'll be one that makes it into some ethics books in probably 5 or 10 years, I'd guess, because that's just it's just kind of unfathomable to even, like, imagine that this was actually happening in public company filings. Just wild. So
I have nothing to add there. I mean, the closest I came to doing audits was as a Siemens employee at a subsidiary that the entire balance sheet was under the materiality level, doing some internal audit tasks. So yeah,
sure.
But I could not imagine just rolling a work paper over. I mean, period.
Yeah, it's crazy. Can you imagine doing that as a tax supporting work paper? The IRS would end you. It would be so bad. I can't believe it. I couldn't believe it once I read it, and I needed to talk about it again. So thank you for letting me go on my soapbox about this.
Sure.
Hopefully we don't have too many more of those types of things happening. Nothing. We talked already about potential TCJA updates. I'm pretty confident we haven't had any other tax related updates, and I don't really expect to. But I'm going to continue to, like, mention that it's a thing that's out there. Maybe one day we'll Chuck Schumer or somebody will get in the news talking about it again. I know they were juggling it around maybe 2 or 3 weeks ago. So who knows?
Yeah.
I don't expect anything to happen, but it's still a thing that could happen. So we'll see how that goes. What else happened this week, Jay? Anything else we should talk about?
You know what? I had hoped to have a video of this, but we had the closest NASCAR finish in history this last weekend. Yes.
Yeah.
It was 1,000th of a second. It was in Kansas Speedway, and we had the first and second place cars coming to the line, and the controversy now is the line was crooked. Well, the line is just there. They actually have a high-speed camera that got them, and if you look at the pictures. But that great thing about this was, not only was this the closest finish, it was also the closest 1, 2, 3, 4. Because right behind them was two. I mean, they were right there, and it was amazing watching it. And the race was on Cinco de Mayo, and early on, they were 5 wide in celebration. It was awesome.
Cinco, I don't know how to say wide in Spanish, but whatever it was, Cinco wide. That's crazy.
I can throw out some Spanglish, but I'm not going to do it.
I love that. Obviously, it's been a big sports week here in DFW as well. The Stars and Mavericks are both in round 2. Mavericks won last night, and the Stars won last night, which is exciting for me personally. Probably not a whole lot of other people that aren't in DFW. But big Stars win. Good that they didn't give up the four goal lead. That they gave up a 3-goal lead in the game prior, and they would have given up a 3-goal lead if that's all they had in this one. So hopeful that they can go to Colorado and do a little bit better, and then hopeful that the Mavs can come home and get a couple extra W's so that maybe they can head off to the Western Conference Finals again. We will see how that goes.
Not necessarily related to DFW sports, but the WNBA season. Where are they? Because if the NBA's in their playoffs, where's the WNBA? Because Caitlin Clark just made her debut.
She made her debut in a preseason game.
Oh, it was preseason.
So the WNBA, the WNBA is in their preseason right now.
Gotcha.
Typically, their season kind of kicks off right around the finals, the NBA finals. There's a lot of discussion actually in some of the sports space of that they're not capitalizing on the right timeline here, because I do think that it would be a little bit more powerful for them maybe to start the season a little earlier or maybe even a little later to really give themselves time to be in the spotlight, because there's going to be a lot of excitement around the WNBA this year, mostly because Caitlin Clark is heading there, and they just have a lot more talent and a lot better quality of basketball than they have in a while. So there's a lot of interest in it, and so I'm really excited. I think actually in the upcoming TV deal, the NBA and WNBA actually bargained it together instead of separately as they've done before. So it is really interesting to see how that goes. And we have a team here in DFW. The Wings are here. They right now they play in Arlington, which is where the Cowboys play too, actually. And they just got like a new like stadium deal. I think they're gonna go a little closer to the city. So they're gonna be back in Dallas, which is exciting. Because that makes it a little easier to get to. Arlington's kind of far. So lots of sports stuff going on, and lots of excitement there with the NHL playoffs and NBA playoffs both happening right now. Baseball, we're whatever, like 30 games in or something. So just getting started there. And then it won't be long, and it'll be OTA time in the NFL. So it's big time sports here for sure.
For sure.
What else happened this week, Jay?
I am at a loss. I mean, my thoughts have all been about starting an e-commerce empire.
Let's go. Start an e-commerce empire. Let's do it. But before we do that, Jay, what are you drinking today?
So I am drinking water.
All right.
I started a 75 soft challenge. I'm going to try to skip the alcohol for 75 days. I am eating a much better diet. I am exercising. I am on a 10,000 step goal daily. And
Nice.
yeah, so I am
That's it.
trying to get in a little better shape. Yes, my
Love it.
daughter is graduating from high school in 2 weeks, 2 weeks from today. Um,
Yeah.
so we'll be celebrating on air 2 weeks from today. Maybe we'll get
Yeah,
her
that's
on
really
camera.
sweet.
Yeah, that'll never happen. And a week after
Special guest.
that, we are heading to Greece. So we are celebrating. So, just want to,
Yeah, that's.
get myself in
I
shape a
love
little
it.
bit. And going to be doing a lot of walking. So just, pre-gaming it a little
I,
bit.
I'm
So,
uh, I'm very very familiar with that actually because my wife is doing something very very similar. She has been increasing her step load by about 20% a week, on a few days. Not she's not doing it every single day. She's up to 15,000 steps a day, which
wow.
seems like a lot, but she doesn't do that every day. She does it three
Right.
days or 4 days a week. And so, because we also are going on a trip at the end of this month or beginning of next month, and it's going to be a lot of exploring. We're going to
Yeah.
Alaska, where there's a bunch of nature, right? So we're definitely getting prepared. One of the things about having been a cord cutting millennial like I am here, we currently don't have a cable TV package, and so the Mavs game that was on last night wasn't on any TV that we had, which meant that the most effective way for me to enjoy that was to listen. And so since I'm a little bit under the weather, it also made sense for me to kind of segregate a little bit from my wife, and so I went walking, and I did that a couple years ago, when the Mavs made a good playoff run, 2 or 3 years ago now, and when we first moved into this community. And so it's a fun little activity for me and helps me to get my steps and get ready for walking in Alaska as well.
Yeah, there you
I
go.
am not doing a soft 75 challenge now, but I did do that at the beginning of the year. So I did make it a pretty good bit of the year without having a beer or anything at the beginning of the year. But today, I couldn't pass up. No shock here. That is another solar eclipse themed beverage. This one was stare at the sun. And so today I have already enjoyed stare at the sun. And I will be having a haze wizard right now. Um, so the stare at the sun is a black lager. So right up my alley.
Yeah.
Haze wizard is exactly what you think it would be based on its name. It is a hazy IPA. By Three Nations here locally. This one, I don't actually know what brewery this is from. Celestial and Ocelot. It's a collaboration, so a Texas and Virginia collaboration. So that's kind of fun. So a black Japanese rice lager, stare at the sun.
Oh,
So
wow.
fun. I enjoyed that one a lot.
Nice.
But I only got one of them. And again, if you beer people out there, if you put an eclipse thing on your beer, I'm going to buy it. So definitely happened. Definitely has happened a few times already. I feel like it's maybe 3 weeks in a row that it's been something like that. But today, not a different one. But I enjoyed that one. All right, so on to our main discussion, the main topic point here. We had a lot of news today, so we've talked for a while already. But we'll get to what was it that you said, Jay? Like dominating the e-commerce space or something?
Yeah. How to get started building your e-commerce
How to get
empire.
started in e-commerce empire. Let's build some e-commerce empires today. So last week we introduced the basics of e-commerce, and what that looks like. So you've got a great idea. So you have that great idea, right? And now you need to account for it, right? That's what we're going to talk about today: is accounting for it and understanding. We're going to be here to walk you through what you need to know from a financial perspective, right? So we're going to talk about financial perspectives. So Jay, let's get into it. First, as it comes to financial literacy, like, what's that? Why does it matter? What do you think?
Well, you got to have a basic understanding about business and things you have to track and
Right.
understanding what profit is and profit margins and
Mm,
other things like key performance indicators. I'm
yeah, sure.
trying to not use the acronyms here. We'll get to those
No,
later.
okay.
But yeah, I
Right.
mean, it's having a basic understanding of if you make this decision and you sell this product at this cost, what's the end result going to be? And
Yeah.
if it's not a favorable result, how can you fix it? And what do you need to do to evaluate things like that? So,
Right.
uh, we've seen that in the startup e-commerce space, people are jumping in there because they see a product or a need, but they don't fully understand everything that it
Right.
takes to get started. So they're not necessarily
Yep.
making the right decisions as they're getting started, and that's kind of where
Yeah.
we're going with this. We want to
Yeah. Right.
help
And
you avoid those roadblocks.
right. And that's why it's important, right? Is because if you don't give good consideration, or if you don't have an understanding of what inventory is, or what margins are, or what net income is, like if you don't have an understanding of what those different concepts are, you're just going to set yourself up for failure in your business as well. And so it's critical to have a basic understanding of what those things mean, and what they mean to you as the business owner and the continuation of your business. So we'll talk more about a lot of those things now. One of the first things that we're going to talk about is understanding financial statements, which I'm extremely well qualified to do. Um, that's my background, of course, is in auditing financial statements, and so let me run through what that means. A a basic set of financial statements comes first with a balance sheet. And what a balance sheet is a schedule of your assets and liabilities and the leftover equity of your entity. So that's what you own, what you owe, and then how much residual is there. A balance sheet is as of a point in time, which
Yep.
means that it's a very specific point in time, which means that your balance sheet changes every day. Every time that you get more cash, every time that you sell more merchandise, your balance sheet is going to change. Um, and it will be different from day to day. It doesn't look back to history. It's as a point in time. This is a pretty critical thing to understand. Um, Also, your assets will equal to your liabilities and equity together. Those things balance together. What that means is that if you have an asset, if you have some cash, right, if you sold an item, or if you bought some inventory, you either have to pay someone for that inventory, you have a liability, or you've now sold that inventory and you have some income, you have some equity of the net piece there, right? So if you those things just kind of continue and go together, right? As you build assets, you either accumulate also liabilities or you accumulate equity.
Sorry,
Um,
I'm laughing here. We are live, and I hear my wife
right.
yelling at the dog. She was wet and got in the house. So, yeah. At least
Dog,
she's not barking like I
also
thought she'd be.
asset, liability, both, but that's definitely true. Pros
Yeah.
and cons to the dog.
Yep.
Big asset, love dogs, lots of equity in a dog. Love equity, sweat equity, all of that. So definitely relevant, actually.
Most definitely.
The second statement and it's the one that most people talk about when they first think about financial statements, is the income statement. People will refer to the income statement as the profit and loss, the P&L. All of those things are the same thing. Income statement of operations, P&L, profit and loss statement. All of those things are just names for the same thing. And what that statement does, is it shows you your revenue and your expenses over a period of time. So that what that means is how much money have you made, and how much money did that cost you to generate that money. That's cost of sales, right? And then how many other expenses did you have as well? So those are your operational expenses, or your like other expenses that may not actually be operational. And so you'll hear lots of terms that can be built off of the income statement. So that would be like EBITDA is it's a very common term that people will think about. And what EBITDA is that's earnings before interest, taxes, depreciation, and amortization. And the reason why people care about EBITDA is because it's taking out things that are either non cash, like depreciation and amortization, or that you kind of have some layer of control over. And that's interest, taxes, right? You have some flexibility, and they're based on the overall income of the entity, or the leverage of the entity. Like those are things that you have flexibility with, and so they aren't as important to like the ongoing operations of the like standalone business. And so people will often look at EBITDA, which comes from the income statement. Now, the income statement is different than the balance sheet, as the income statement is run over a period of time. It consolidates information from a certain point. Maybe that's a month, maybe that's 3 months, maybe that's a year, maybe that's multiple years. But it consolidates that information into one form from point A to point B, and it should tell you that. And so when you look at an income statement, it will tell you for the year ended XYZ, or for the month ended XYZ, and so it is accumulating everything that's happened over that time into one report. One other statement that exists, that's typically a little more complicated, but is also extremely important, is the cash flow statement. And so the cash flow statement breaks down the summary of your business into operations, the cash flow from your operations. And we talked about this a little bit on a previous episode about how one of the key things that you want to look at as a business is your operating cash and the cash flow from operations. Because if that number is negative, then you've got some big problems that you're going to need to resolve. And so that number can be a very, very important number for you. Also, there are cash flows from investing, which is exactly what it sounds like. So cash flows for buying fixed assets, investing in assets, or literally investments. So like buying stock or something like that. And then also cash flow from financing, which is the same thing. How much did you borrow? Or how much did you have to pay against your borrowings? Like those are segregated, and it's for the same reasons that we talked about. So when you have investments like fixed assets, there's a little bit more control. Like the future activity of that on an income statement is non-cash, and the same with the interest related to notes and financing activity. That future interest it's flexible on the capital structure. So there's a lot of things that can change just based on the way that you structure your business. And so anytime that you're looking at your own financial statements, it's important to know all of these different cash flow factors. But if you think about daily cash flow, they're not always going to show up on a cash flow statement like this. A cash flow statement typically will reconcile your assets and liabilities for over a period of time to show you the changes in those types of things. That's your operating cash, as how much cash did you actually generate from all of the running of your business. And then the others are a little bit more self-evident, where you've purchased fixed assets or you've taken on loans and those types of things. So, Jay, what other thoughts do you have around understanding financial statements?
Well, just sticking with the cash flow statement, you might see different results depending on what stage of business you're in.
Yeah, absolutely.
Think about you're in pre-rev state, and this might be, a software company or an e-commerce company. You're spending money right now to develop those sales that will be coming down the pipe, and so your operating cash flow may very well be negative, and as will be your investing and financing. But
maybe
I'm just saying. Then you're in revenue stage, and let's say you're looking at the quarter where you're Black Friday and you're having your holiday sales. You would expect your operating cash flow to be exceeding, and your other cash flow, depending on what you're doing, at that point, it could be positive or negative. It just depends on everything you're doing at that point. But you're taking advantage of that positive cash flow from operations, either to pay down debt, invest in more equipment, maybe inventory is operational, so that goes either way. The other thing about the balance sheet and income statement, one thing that we as accountants and advisors like to do is look at comparative statements. That means we're comparing two or more periods, and looking for trends and other highlights that you might call it. And the tools that we use, my preference would be Xero for an e-commerce company. We build out the income statements to be comparative, so we can look at it quarter over quarter, year over year, maybe month over month.
Well,
We want to know
and,
what you're doing.
well, and especially in the early stages of your business, it's really important to look at it frequently like that because
Most
you do
definitely.
need to know, you do need to be able to identify quickly anomalies or things that are unusual or things where you need to like tighten up, because there is no question that that in the early stages of your business, being able to respond quickly is extremely critical. Um, and so looking at it more frequently is a really important thing to do. I don't think there's any question around that. One other just cash flow note, like especially as at the beginning of if it's your beginning stages, right? Your investing and financing activities may be very cash flow positive, right? Because somebody may be financing you. Like anytime you get a loan, that may be a very big number. Anytime you get equity investment, that's a very big financing number. And so you may have a whole bunch of cash flow from financing to start your business, that is then supplementing your operating cash
Yeah.
losses, right? So and so like you were saying, Jay, like that flips as soon as that changes, right? So as soon as you now are starting to generate revenue, now your operating cash is going to start to look positive, hopefully, right? As if you've designed your business appropriately. But now your financing activities are going to be a cash flow draw because now you're going to have to pay back all those loans, or
Exactly.
you're going to have to, or if you're like a sole proprietor, like we talked about before, you're going to have to pay yourself, right? So your distributions are going to be activities like that as well. And so you will, and so depending on your stage, you're going to see those things change and be different. That's definitely true. And so knowing what to expect from a cash flow perspective in those different stages can be really important on understanding where you stand. Speaking of where you stand, an important thing to do at the beginning of at the beginning of any business, and then also any ongoing business, is budgeting and financial planning. So that's understanding where you stand. I think that's a huge thing, right? And so one of the things that's really that can be really valuable, right, is creating a startup budget and projecting some ongoing expenses. So we have a new viewer. It's Agson. Nice to see you today. Welcome to the show. I'm Chris Gino. He is Jay Kimmelman, and this is On the Rocks. We're talking now about budgeting and financial planning for e-commerce entities. And so creating a startup budget and financial projections can be really important. Um, uh, and and can go a long way. So Jay, when it goes to estimating startup costs and ongoing expenses, like what do you have like best practices or things that people should be thinking about as they're developing an e-commerce business?
Well, I think a lot of that is unknown when you're starting, and you want to be working with somebody that has done this before that can give you some guidelines to help you do that. And you want to build out your forecasts and budgets so you know how much cash it's going to take. First thing, we have to set up all of the systems that we're going to be using, and you want to make sure that you have the systems, and there are some people that will set up, they'll go Shopify and they'll set up the $39 a month plan and say that's what we're going to go with. But there
Right.
are others that say, no, go Shopify Plus at $2,000 a month out of the box because of everything that it comes with. Well,
Yeah.
you have to be the judge of what's right for you in your business, and you have to build that into your models. So you want to look at that and estimate where you need to go from that perspective, and know the technology that you're using is going to help drive your sales, help you achieve your sales goals. In addition, you have to know how much cash you're going to need to design, make, and transport your goods to the
Right.
warehouse so that you can sell it.
Yeah.
So
Yeah.
there's a lot that goes into this. So having a peer group and a mentor is so important. And working with advisors like us that have worked with other companies, we could help you put those plans together to help you be in the know of what you need to, at least have up front as far as cash flow, working capital, and what tools you are going to be needing to get that done.
Yeah, absolutely. And that can go a long way, because if you understand where that begins, right, you're not going to have a lot of changes in your ongoing costs for a while, right? You may have some increased pricing pressure potentially, but you're going to start off at least with a pretty good idea of what your future products are going to cost, and where you're going to stand overall. And so being able to budget that up front, as well as all of those other costs, like you're talking about, like how much does it cost to register our business? What are the other things that we need to do here? Those things can be extremely important in getting you off on the right foot. One the next thing that will be extremely important follows right along with this, right, and that's managing cash flow. We talked about the cash flow statement and all of the different factors, but factors affecting cash flow in an e-commerce business are very wide, right? It's how much do your goods cost? How much do you sell your products for? How much is your 3BL or your warehousing partner or your warehouse itself? There are loads and loads of things that affect your cash flow, because it's how much of an ability do you have to draw on a line of credit, or have you taken out loans and are you paying them back, or will you need to be paying them back soon? And so there are so many different things that impact the cash flow for an e-commerce business that we could probably spend another hour just talking about those things. But I do think it's an important thing to think about, right? So Jay, we've talked about this several times before, but do you have any favorite strategies for improving cash flow management?
When you're starting out, it is so hard to manage cash flow because you don't have a lot of history. But
Right.
after you've established history with suppliers, the biggest thing I recommend is trying to edge out those payment terms. Buy yourself more time.
Yeah.
If you are on e-commerce, it's kind of hard to cut down your AR days because
It would be really hard to do.
they're going through your daily sales is what you're looking at, and that cash will be in the bank 2 days from now. So you're hoping every day to have that next greatest sales day to drive that. So the thing about it is, look at it going in. If you're looking at this as a side hustle, you have your day job, you're financially secure, it's one thing. If you're jumping in there and you're starting this and this is your livelihood, you're going to need that cash up front. So you want to make sure that you are set and you have what you need to live on and build your business. But the other side of that is, if you have good credit, there are ways to get some working capital up front.
Right.
A lot of people will borrow against their home, get a line of credit, things like that. Now keep in mind, to borrow against your home, that's not tax deductible. That interest is yours.
Mm-hmm.
The way the rules are today, you have to be making improvements to your home to use that as tax deduction. But get the sales going, and if you get the sales going, you can work on getting merchant funded loans where they will advance you funds and they will take a piece of your sales every day, and that will help you get that cash flow moving and get you the cash you need to get things rolling at the beginning.
Yeah.
And even if you do expansion. So
Right. Yeah, and there are also some government programs with the SBA that may be able to help you with. There may be SBA related loans that can help you as well. So there are loads of different options out there for identifying sources of funding. Right. One thing that you mentioned, right, is that sometimes you just need cash, right? So the importance of maintaining a cash reserve is something that I think is really important, right? We don't want to understate that. Because you don't know, especially if you're a D2C business, you don't know exactly what that next day sales are going to look like. And as much as you want that to continue to be on an upward trajectory, it isn't always. And so because of that, like it can be very important to make sure that you have at least some kind of liquidity, so that you can fund the ads that you need to generate your sales, or that you can pay for your inventory to be here timely, right? So cash reserve can be a really important part of making sure that you understand where your cash flow is going, and how much you're going to need going forward. Knowing how much you're going to spend, doing budgeting, doing planning, can be really helpful in making sure that you have the right amount of cash now, and then also the right amount of cash for the future. So we talked a little bit about this already, Jay, but we wanted to talk more about sources of potential funding. And so you talked about self-funding and bootstrapping, right? Like you can take out your own personal loans. You maybe you're already independently wealthy from your different project. You're on your third side hustle now, and you've just you're Mark Cuban or something, right? And you've been really successful, right? Those are definitely options, right? Is self-funding or bootstrapping, like you were talking about, right? Just like, hey, this is what I want to do. I know I can do it. I'm getting in there, and it's just going to be that's going to be my life now.
Yeah, and sometimes you have to do that until you get to the point where you can get bank loans. It's right. Like I was talking about my prior life in nutraceuticals. I bootstrapped that business until we got to the point where we were able to buy equipment and be able to lease it or get funding from the bank. And you have to be able to survive to that. And by doing that, I actually was working a full-time job to make sure that I was meeting my personal needs. So, it just depends.
Right. Yeah. And so once you've either if you've already succeeded in building on a good plan, maybe you have a banking partner, right? So loans and lines of credit are options as well for funding. Loans are you get a big chunk of capital now, and you pay that back over time. Lines of credit are a little bit more flexible. They're the lines of credit. It's very similar to a credit card, right? You can draw when you need the money, and you can pay it back when you have the capital to do so. But any time that you're holding that money, you're going to pay some interest on it, right? And so loans and lines of credit are typically through banks, although they can be through third parties that aren't banks. Although that's significantly less out there in the marketplace. But both of those are options. You could also have some kind of investor, right? You may be private equity or venture capital. That your product might be right in the right space, right? Where private equity or other venturers, Mark Cuban maybe, are interested in giving you money to help you to grow or help you to achieve your dream, right? And actually, if you think about Shark Tank, that's what they are, right? They're venture capital. That's private equity of some sort, right? They're infusing your business with capital, but also taking an ownership stake of some sort. And typically, they're taking that ownership stake in some kind of preferred manner. So they're going to have a preferred class of stock or some type of preference in making sure that they are going to get paid first if the company doesn't succeed, and also, of course, if the company does succeed. There may be all kinds of different ways that happens with venture capital. With angel investing, it's a little bit different. The idea is the same, right? They're giving you money to fund your business, but the expectations are maybe a little bit less, right? The angel investor is not gonna have that same kind of preference all the time, although they may. But they really just like your idea and want to support you. One other idea, and one of my favorite products used this type of funding strategy, and that's crowdfunding. And so my absolute favorite shoes are Tropic Feel shoes, and Tropic Feel was a Kickstarter, and Kickstarter is a very popular crowdfunding platform. And so you say, hey, here's the thing I want to make. Everyone out there in space, come look at my thing. If you want to give me X dollars for the product, and once we get enough people who are interested, we'll do the production. And so crowdfunding is an extremely popular choice in the startup space. But that means that you need to be very, very well prepared. So all of the budgeting and all of the other financial projectioning that we've talked about already, if you were going to crowdfund, you need to have that stuff really well and tied together, because you're basically listing your product for sale before you've even kind of started it. So you need to have a good idea of where you're going to end up. And I don't know. Tropic Field doesn't use. They're not on Kickstarter anymore, but they do. Or I say that I don't think they're on Kickstarter anymore. But they have their own webpage and everything is going great. I have so many pairs of their shoes. I love them so much that it can definitely be successful. And so that's kind of the outcome of a good crowdfunding strategy. But it does take a lot of planning, a lot of forethought into going to it from the beginning. Jay, are there any other like funding sources that you think are valuable or worth talking about today?
Well, credit cards, of course. I mean,
Oh yeah, sure.
you get 30 days immediately if you use those. So that will help you get some financing there. And you know what? Everybody's going to go to a family picnic or a family gathering this summer. You're sitting around telling everybody what you're thinking. Grandma's going to tell you you're crazy, but your brother-in-law over there, he might be interested. You never know.
Yeah.
And he might have,
Yeah.
a little nest egg sitting there that he's
Yeah.
looking to invest.
Yeah.
Family's a great way to do it. And
It
a
becomes
lot of
venture
times you want
capital
to
through your
keep them.
family.
Come again?
It becomes venture capital through your family.
Right. Now, sometimes the family dynamics and things, make it an investment.
Yeah.
Don't bring them into the operations. Sometimes it can get quite dicey if that's the case.
Right. No, I do think
yeah.
that's an important
Yeah.
consideration to make anytime that you're going to be in business with somebody who you're already close to. There can be so many other dynamics that can go along with that you really want to
For
be
sure.
thoughtful about that. But it's absolutely an option, and especially if they're going to be outside of the business, it may be a very, very good one. I mean, there's probably tons and tons of stories about XYZ company got money from the girl, they got money from the parents, right? It's that kind of
Yep.
strategy, right?
Exactly.
Is that family lending. One other thing that we want to talk about as we touch on this financial literacy, and we've talked about this so many times, is financial metrics and key performance indicators. The key performance indicators that may be referenced as KPIs. That's probably what I'll typically say, but laying it out there of key performance indicators is an important thing too. So those financial metrics like gross profit, like net profit, like net income, like those are like profitability metrics, right? Those are just numbers that show you how much profit you're making. There are loads and loads of financial metrics, and if you want to hear us talk about them, you can go find our episode on financial metrics and KPIs. We will also probably have one in this series that talks a little bit more about that.
We'll put it
loads
up
of them
over there.
over.
We'll put it. We'll
over-
put a card like that
over
up
there.
on your side.
Okay.
Yeah.
That sounds great. As an e-commerce business, though, one of the things that will be most important to your success going forward is understanding and tracking customer acquisition costs and customer lifetime value. And what are those things? So let me tell you what those things are first. Customers don't just come to you for free. Typically, you have to find them. You have to let them know what your product is. Maybe you do that by paying Kickstarter. Maybe you do that by paying Google. Maybe you do that by paying Facebook or Instagram, Meta, any of those types of any of those businesses, right? You have to get your product out into space somewhere so that people know that your product exists, so that you can find your target market, so that those people can come to your website or your Kickstarter page or whatever it might be to buy your product. And so that that takes money, right? The people don't just come for free. That advertising costs, all of the things around acquiring customers are really important. If you think about that even more broadly, like from a business to business perspective, like the acquisition costs are even more substantial because maybe you have an entire sales team or something like that. Like, so customer acquisition costs can be small, or they may also be like very, very large. But understanding that allows you to understand how much flexibility you have in your profit margins to go gain more customers. The other thing that's really important is what I mentioned is customer lifetime value. And what customer lifetime value is how much that customer is going to generate for your revenue over the life of their life cycle. And oftentimes that's like unclear, but maybe it's a customer buys from you one time or one time only, and that's it. So your average order value and your lifetime value are basically the same. But if you're like Tropic Phil and me, my lifetime value to Tropic Phil is a lot higher because I'm buying from them multiple times. I've bought from them once before, I've bought from them twice before, I've bought from them 3 times before, and so I'm likely to be a recurring customer for them. And so that idea of a recurring customer, somebody who's generating revenue for you multiple times, say you're a nutraceutical provider, that customer that's providing you this value over time, like they're going to buy the different nutraceutical over and over and over again because they're producing something right, or they're taking the pill, or whatever it might be, right? Like those types of things are really important because once you understand that, then you can do better planning. So all of the budgeting and projecting that you can do, it has a basis now in actual fact. And so because of that those two metrics more than any other, and then we talked about this on a previous episode too, are extremely powerful and can go a long way in helping you to understand like what it's going to cost to run your business and how much value you're getting out of it. In an e-commerce business, there's absolutely no question that inventory related metrics, so inventory turnover specifically, is extremely important. And the reason why that is important is because you need to know when you need to reorder inventory. You need to know how quickly you're selling through the inventory you have, and you need to know how much inventory you need to keep on hand on a regular basis in order to fulfill your orders. One other metric that can be really important, not as much to D2C e-commerce businesses, but more of those like business to business, or really the business to business entities, is your day sales outstanding, right? And so that's your AR turns. So how quickly are you collecting on your outstanding payments? And truly, like if you're really cash tight, how quickly you're getting money from Shopify or whatever platform you're using can be a really valuable metric. But you'd hope that that's going to stay in 1 or 2 days, and you should have that much flexibility. But days sales outstanding is a really important metric because it does help you to understand how long it's going to take you to turn those sales into cash. And of course, that cash then helps you to fund your operations. And if you don't have enough of that cash, as we've talked about before, then you run into very significant problems. So both inventory turnover and AR turnover can be really important metrics. Inventory turnover, certainly for D2C customers and D2C entities, is much more critical because you do need to know when you need to order inventory again, how much inventory how long your inventory is going to last you, and things like that. But Jay, are there any other financial metrics that or key performance indicators that we'd love to add on here?
Yeah, I want to just key in on the DSO there real quick on the day sales.
Sure.
So that is basically your AR terms. So if you have DSO of 30 days, those customers are on basically net 30. They're paying you in 30 days. And that's where you have to monitor it to make sure you're maximizing your cash flow. You want to minimize those days outstanding while maximizing them outstanding on the bills you're paying.
That's right. Your days payables outstanding, if you will.
Right, exactly. So you want to extend that as long as you can with your vendors. Right. On the other side of that, you were talking about the inventory terms. And if inventory I mean, those are things you want to be monitoring, because if they're speeding up, you might have one of those trending items. You might need to order it faster. But if it's slowing down, are you going to run into an obsolescence issue with that inventory? Are you going to be able to sell all of your inventory? Do you need to get into making reserves and things like that? So, and those are things we'll talk about some other time. That's a little more advanced for today. But the other metric I was thinking of is the AOV, the average order value.
Order value.
You use an upsell, or you try to sell more products. You increase that average sale, which basically increases your sale. So, it's when you have somebody on your site, it's a lot easier to get them to buy more than it is to get them back again. You have to delight them to get them back again, where they're already there and captive. So, maybe you send them an email immediately after that order with an offer for, 35% off the next product they buy. So that will help you increase your average order value.
Yeah, and that goes hand in hand with lifetime value, because your average order value, you want your lifetime value to be like as far away as possible from your average order value. Exactly. Because you want those average orders to keep coming through from those customers. The closer those are together, the closer that it is that you're just having one-time purchases, which is
most definitely.
Which means that their customer acquisition costs can be really, really punitive, because you're just giving all of that back. And so, Jay, we've talked about loads and loads of things today, and there we had a few other topics that we had, but I think we can talk about them another time. And so, do you have any other thoughts or any other closing conversations around the start to financial literacy?
Yeah, this topic comes up all the time, because as we are in the advisory world, we see a lot of questions coming up, whether it's on social media or possibly on even with some of our clients. We never thought about this. Well, it's so important to have a plan going in, and making sure that you have an understanding of what you need to do and making the right business decisions. So having this understanding is so important to what you're doing. So we want to get this started here, and we're going to keep driving this home. We're going to keep building on this and getting deeper and deeper.
Yep, I love that, Jay, and I'm excited for it. You know what else I'm excited for? I'm excited for getting better. And that's my plan for the weekend, is to rest, to drink a lot of fluids, to put the eye drops that I got in my eye so that it can heal up, and I don't have to worry about dabbing at my eye and getting all the goo out of there or whatever nastiness. I don't have any other weekend plans this time, so if I'm going to get ill, this is the time to do it. It's next weekend that's really exciting. My daughter turns 2 next weekend, so we're really, really looking forward to that. But that's not this weekend. And so this weekend it's probably a chill week, and definitely one where I'm hoping that I can recover as much as possible. Jay, do you have more exciting plans than that?
I actually do, and don't relax too much this weekend, because it is Mother's Day on Sunday.
Oh my gosh, you're so right.
Yes.
The good news is, so first things first, moms out there, high five to all of you guys. Mothers do so much for their kiddos. My mom is that way, and of course then my wife. My daughter would not be the wonderful little human that she is without my wife. And so I've got some flowers already. I got some other things going on already. We're working on that. Trying to make sure that it's an awesome Mother's Day for Kayla, and then also hopefully for all those other moms out there. So maybe it was a bad time to come down with an illness, or maybe it'll be my excuse to be like, maybe we don't go to brunch today or something like that. Who knows? We'll see. Do you have? I know Wendy's around there. You were mentioning that she was hollering at the dog earlier.
Yes. No issues there. She's working all day tomorrow. She's got some clients at the office. And I actually got to run to Lowe's tonight, or first thing in the morning, She wants raised beds in the yard, so I will
Let's
be
go.
building 2 raised beds tomorrow. And
Yeah.
Wendy, her sister, and the two nieces, my daughter and my niece, are heading out Sunday, so I have a free afternoon to watch the Darlington race. It's throwback weekend for NASCAR, so it's going to be a great Sunday for me. And yeah, keep continuing
Well, that
working
should be
on
fun.
my
So what a
75 soft challenge. And
There you go.
I'm actually working on extracting some of that data, my step data, out of my iPhone into my Notion dashboard. So
Oh
yeah,
yeah.
I'm doing a lot of
And
fun
keeping
stuff
track of
there.
yourself
Yeah,
right there in Notion. I mean,
yep.
that's really exciting. Yeah, gardens are awesome, Christy. You're definitely right. I know our plants. We're really excited about about them finally growing up. I didn't make raised beds, but I did have to put some stuff, some like I don't even know what it's called, some fencing or protection around some of our plants so that the rabbits wouldn't eat them. So I definitely feel for you, Jay. It's going to be making raised beds is fun. I have a friend who made a whole bunch.
Yeah.
What's Wendy excited to grow?
For her, it is lots of herbs.
Oh yeah, okay.
She loves to have them and use those fresh herbs in whatever she happens to be cooking. We
Yeah.
actually, it was right outside my window here at one point. We had our garden over here. We're going to build it on the other side, on the fence
Oh
over
okay.
there. But we actually
Yeah.
had a rosemary. Um, it
Tree.
actually, it was that thick. I mean, literally, the
Oh my
stalk
gosh, yeah,
was
like a
that thick.
tree.
It was, and it
That's
took
amazing.
over everything. And I'm
I
actually
believe
looking
it.
forward to planting tomatoes and eggplant.
Yeah, there you go.
So yeah,
Those are definitely fun things to plant.
for sure.
Planting, gardening, definitely fun. A nice thing to do to relax and get outside, so that you can enjoy those things too. So Jay, 10,000 steps a long way, but I believe in you. You can do it. You're gonna do awesome. Beer though, really big fan of that. So maybe you'll do good. I believe in you.
I'm
I'm
at
sure you
8,000
can.
already today. I've hit my goal
Oh
of 3
yeah,
days this week.
easy,
So yeah,
easy.
I'm
Ten
moving.
thousand is
Yeah,
cupcakes. Let's
yeah.
go. Let's go. Well, again, Jay. Obviously, talking to you is the highlight of my Friday, and I really do enjoy talking about e-commerce and doing that with you. Do we have any other parting thoughts?
Uh, that's it from my end. I just want to say I hope you feel better. Hopefully, you get rid of this quickly. You have a great weekend with your wife and daughter, and looking
Yeah,
forward
man.
to her birthday next weekend.
Yeah,
Lots of
it'll
fun
be
stuff coming
exciting.
up the
Got
next
lots of
couple of weeks.
plans,
Yeah.
lots of plans going on there. So it should be a whole load of fun. So we'll talk more about that in 2 weeks' time,
All right.
and maybe a little bit next week. But in the meantime, Jay, have a great weekend, and we'll see
You
you all
too.
next week.
Take care, everybody. Have a
Bye,
great weekend. See ya.
everyone.